Donald Trump wants to drill, baby, drill, but can that become reality? Welcome to Market Insight. I'm Elena Casas. US President-elect Donald Trump has promised to increase domestic drilling, but the US has already been the world's leading oil producer for the past 6 years, pumping out about 13.4 million barrels a day. So how much can that really increase, and would it lower Americans' gas prices at the pump? To find out, I'm joined now by Viktor Katona, Head of Oil Analysis at Kpler. Viktor, hello, thanks for coming in. How then can this translate into policy?
Well, I think that we need to define what is actually just market hype about Donald Trump coming into office and making all the regulations laxer than they were, and what is the reality? Because I think the reality is that everyone has been drilling already. So drill, baby, drill falls on deaf ears because everyone has been making as much money as they possibly wanted to make. And beyond this, there's not much of a growth story happening in 2025 or 2026. The next years will be years of capital discipline. And if the companies, the shale companies, want to stick to that, they don't need to drill that much. So I think it's more like moderately drill, maintain your guidances and your forecasts, and really look into how you could balance the market. That would be the mantra of oil companies, not really the outright drilling of everything that is still available, because that doesn't really lead to anything.
In other words, you don't think US companies will even want to increase oil production, given that presumably they want to maintain the current price?
I actually wouldn't be surprised if the amount of wells drilled in the United States would just continuously decline. Because in the United States, you also have this story of efficiency gains, whereby one well that's drilled just yields more crude than it did previously. So you don't even need to drill that much to have the same amount of crude. I think that is going to be the future. So less wells, more efficient operations, and very much, a stagnation even in the U.S. supply growth, because they don't need to grow. They have the resource base and they can just as well enjoy it while it lasts.
The global oil market is already forecast to be oversupplied into 2050, so does that mean that Donald Trump's aim of reducing gas prices for Americans could happen anyway?
I think it would happen anyway, even if he didn't have the policy goal of depressing the gasoline price domestically. It just simply would happen because the oil price would get lower. And ultimately, if the oil price gets lower, then all the prices of corresponding products also edge lower. Of course, he could help. He could ease mandates. For instance, biofuels blending into gasoline could be very flexible over the upcoming 4 years. So I think there's going to be a lot of policy flexibility. And the only goal of this flexibility would be to make everything cheaper than it was in the Biden years. Gasoline prices particularly would be of high interest of the Trump administration, just to show that they are better and more efficient.
How might this play out geopolitically, since if he wants to drive down oil prices, that's unlikely to play well with OPEC Plus producers? So how can they shore those prices up?
Well, they could balance the prices, and geopolitics could particularly be of interest in this case, because if you just look at the Trump administration, the faces that you have and the people, almost all of them are Iran hawks. So getting Iran off of the markets could be one way of showing to OPEC Plus, we take away here, basically the prices get lower because we oversupply it, but also we render the Asian market a little bit more competitive for you guys. Venezuela could also be sanctioned even further. So tightening of the sanctions, I think that's going to be the big bullish story of the next 2-3 years, rather than, the supply and demand fundamentals.
There also are, of course, some geopolitical factors supporting the price at the moment, not least rising tensions between Russia and Ukraine. How much might that affect supply and indeed the price if, for example, Ukraine targets Russian oil infrastructure with these long-range missiles it now has?
I think very easily, because, say, half a year ago, we have had waves of Ukrainian strikes on Russian refineries. And ultimately what this has led to is oil products being quite expensive in the summer period. If we have another wave of such strikes into the winter period, it's going to be repeated all over again. So if that happens, the impact will be high, because Russia still matters for the oil markets, even if it's sanctioned from the G7 countries.
Viktor Katona, Head of Oil Analysis at Kpler. Thank you so much for joining us.
Thank you.
And that's your market insight. Don't forget, you can watch more videos on Reuters.com.